In this presentation, we will take a look at the display options for a balance sheet type report, options that will typically be applicable to many other types of reports as well within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the view drop down up top and go into the open windows list. We're now going to be going to the balance sheet standard report and taking a look at the customize options or the display options within it. So we will do that by going to the reports drop down up top. We're going to go to the company and financial and scroll on down to that balance sheet standard type report, one of our favorite two types of reports here. We then have the options that are within the report up top, and then we have the customized reports options here. We're first going to be taking a look at all these options that are in the face of the report settings or setup, and then we're going to go into the display options, which will be in this customized reports. As I open up customized reports, we see the tabs up top. We see the display tabs here. Some of these options will be repeated in the two areas or within customized reports and without as well. I'm going to first change the dates up top. I'm just going to select the one date. You'll recall that the balance sheet really only needs one date. But if you want to see the range is going to help you when you go into that data. So I'm going to first start off with 12/31/20, January 31st, 2020. Let's take a look at some of these options up here. Customize reports we will come back to at a future point. Then we have the comment on a report if you wanted to add the comment on a report. If you made changes to a report, then you can share the template. You can actually make a template, and we'll talk about how to make changes later. So we'll talk about that with regards to the customizing of the reports, and we'll make different types of reports. Once you have the template, then you have taken the standard balance sheet report, in other words, and changed it, modified it in some way. You can call that a template and basically share the templates that you have created. You can also memorize the reports, which is a great tool for us because it'll go into the reports, memorize reports settings, and therefore we can go directly back into it. So if we saved changes and we want to save those changes and have a report that's going to be customized to us, in other words, if we took this standard balance sheet, we made changes to it, then we want to go back to that report that has the changes rather than making them again. We can then memorize the report. We will show how to do this in future presentations. We have, of course, the printing options. As we've seen in the past, we can print the report here, which will print to the printer, or we can go to, and most reports will have this, the print to the PDF file. However, not all reports have this as well, including graphs and things like that. And therefore, the printing option with the Qt PDF printer is something that's useful to have the Qt PDF printer or some type of printer that will print to a PDF is a nice tool to have. We then have the email options, so we can send reports as Excel, or we can send the report as a PDF, so we can actually send it directly out of the QuickBooks system, which is nice, rather than basically saving the file and then sending it. We'll have to have our email, of course, set up so that we can send it out directly from QuickBooks. Then we're going to have the Excel, which we have seen. We create the new worksheet. We will be using this more in the future with multiple different reports. This is an option for many different types of reports as well. We have the collapse rows. So if we had multiple rows, then this could be used to collapse them. We may use this and see this in different types of reports in the future. Notice it says no rows with subs found to collapse. In other words, if we were to create sub accounts, those are the type of accounts that would be collapsed. Now note, you might be saying, hey, I got all these little triangles, these collapse things, right? But these actually are not sub accounts. These are the types. So just to see what that looks like, if you go to the lists drop down up top and you go to the chart of accounts, you'll note the types are here. So the little triangles that are set up are actually the types that are a required field for all accounts. The sub account is not a required field. So in other words, if I wanted to create a new account, for example, let's go into this account by selecting prepaid insurance, selecting the drop up at the bottom or the rise up, and then we'll go to the edit account. You could create this as a sub account. And then if we create it as a sub account, then if we use that collapse option, the sub accounts will then be collapsed into the parent account. I'm going to close this back out and close this back out. And then we have the refresh item here. So the refresh item will make it so if we make any changes and we come back and we're saying, well, did the changes happen? We could then refresh the field. Now, the settings that we have set up are typically to refresh automatically. So we shouldn't need this button often, but if you do not have the settings set up in that way, then you would want the refresh settings. And if you're ever not sure that that the change is played out, then you can also use the refresh button to just make sure that it has taken place. Then we have the dates up top. So the dates, if we go down, we have the customized type of date fields. This will be pretty much the same for most reports. So it looks kind of intimidating, but if you go through these, it'll give you kind of the normal items or date ranges we could have. It could be today, this week to date, this month to date, this fiscal quarter. So oftentimes we might want to break things out by quarter or by month. This fiscal quarter to date. So we're going to say the quarter up until this point in time, the current quarter that we are in. This fiscal year, which if you're on a calendar year would be the calendar year. This fiscal year to last month. This fiscal year to date. So the fiscal year up to this point in time. Now, these are useful even for the balance sheet. Now, notice they're going to be really useful for the income statement, of course, because we need a date range to run the report, because that's what the report will be displaying. Here in the balance sheet, we only have one date here. However, when we run these date ranges, if we drill down into the detail, to the transaction detail, then these ranges become important because that transaction detail is a timing report needing both a beginning and an ending time frame. We have yesterday, we have last week, last year, and so on and so forth. Now, if you want to then just customize the time, then you could just put the one date here. If you just put one date here, note that if I go into the detail using the zoom feature within the balance sheet, then I have no detail because the beginning date is the same as the ending date. So note that it's really useful to use a range even on the balance sheet, which is a point in time, so that when you go into the transaction detail by using the zoom feature, you will then have a relevant range that you want to look into, which is a common use of the balance sheet. Closing this back out, that's going to be the dates, and then we have the show columns. We can have the total only, and that's going to be the default for the balance sheet. Now, the total column is a little bit deceiving on the balance sheet, at least, because it's really only applicable if we adjust the date ranges. So if we only have a point in time right now, then it won't change anything as we adjust anything. We will go into the ranges, and we can see the ranges more clearly when we go into the customized report. So we'll come back to this field when we go into the customized reports. We have the sort by the default or by the total. Do you want to sort by the default settings or by the totals? Now, when you sort by the total settings, it doesn't mean that you're going to be basically sorting all the accounts on the balance sheet, because the balance sheet is in order by assets, liabilities, equity, income, and expense, and then more detailed by the account types. However, then if you go within the account settings, for example, in other current liabilities, you'll note that now it's in order by the amounts. So you got the lowest amount on top. If you wanted to change that, you go to A to Z, and then you're going to say the amounts within the account setting, for example, here, have the highest amount on top. All right, and so that could be a useful way to display that, because it'll have your more kind of relevant information on the top of every category. Again, the whole order of the balance sheet is going to be in order by account type, assets, liabilities, and then the equity section, and then the subcategories of them. And then within those sections, you can then sort in this way by the amount of total. That could be a useful format. If you remove that and you go to the default, then it'll typically within the categories be sorting by the alphabetical order. So now if you go within the categories, it's gonna sort generally by the alphabetical order as the default setting. Okay, so now I'm going to scroll back up. I'm going to go back to the customized report. Now let's look at the customized report field. We're going to be concentrating here on the display. Note you have 4 tabs: display, filter, header, footer, fonts, and numbers. Concentrating here on the display. So up top, we have the same field that we had with the date ranges that we saw before. We could select these date ranges here, or now we have the customized range where we could set a beginning and ending date. And if we were to do that, we could say 01/01/20, for example, and that would give us the entire year. If I say OK with the date range on the entire year, it does not change the report at all. However, If I was to then go into a certain account by double clicking and zooming into it, it does default now into this new report, the transaction detail by account, with regards to that date range rather than 1 day, 1 point in time. That's very useful. So that's why we want a date range in the balance sheet. Closing this back out, we're going to go back to the customized reports up top. So that's going to be the date range. Then we have the report basis, which we also have here. I didn't point that out. We have the basis that we could change from accrual to cash. Now, note, this could be kind of useful to look into. Like, if I close this back out, you can change this, and it'll change everything basically automatically. But it only changes it with regards to how things are set up within QuickBooks. Because you'll note when I went to the cash setting here, it didn't do anything such as remove the receivables, because it can't remove the receivables because the receivables are being driven by how we entered the data into the system. And in other words, if it was on a complete cash basis, we wouldn't have accounts receivable because it's an accrual account. So just note that when you're going between accrual and cash, you're not really changing to a complete cash or accrual basis. You're changing kind of the rules within QuickBooks that it is using to report things like revenue and expenses. So in other words, the default setting will be accrual, and I would recommend an accrual setting for most people, unless you have some specific reason to go to the cash basis, even if you are entering data more on a cash basis system. In other words, note that if you go to the Home tab here, what QuickBooks is doing is it's saying, I'm going to set up revenue when you create an invoice, even though you haven't collected the cash generally on an accrual basis. And that's basically just simply the way the system's going to be set up. Now, notice that doesn't mean that that's completely right every time, because I could have entered this invoice after I did the work, far after I did the work. So it's still not a perfect system. QuickBooks just needs to be able to define when to record the cash at some point in time. And if you have the default accrual settings, it's going to use the invoice in order to do that. So just note that the way you enter the stuff into the system is still going to drive whether you're on a cash or accrual basis. If you simply take everything from a bank statement, for example, and enter it directly into the check register at the point in time it clears the bank, then you're on more of a cash basis because you're entering the data on a cash basis by only recording the cash transactions that are coming from the bank in the system. And in that case, if you go back to the balance sheet and you select accrual, it doesn't mean you're necessarily on accrual. It's just because you entered everything on a cash basis. And so you're not really on an accrual system there. So just note that these two settings are going to kind of adjust when QuickBooks will determine when to record revenue and expenses according to the rules of the system. But it doesn't automatically make everything convert to a cash basis, because it also depends on how you enter things into the QuickBooks system. So I would recommend keeping the default on the accrual settings, even if you enter things more on a cash basis generally. And then we're going to go down to the columns. We got the display columns. These will now be relevant given the fact that we have a range here. So now if I was to choose some other option here, say I was to choose a month, and then say OK, now because we have the range up top, not just this single date, we'll have January, February, and so on. Now note this is as of the month end for each of these dates, the month end of January, month end of February, and so on and so forth. We only have 2 months of data, so everything after February is going to be the same because there's no change there. Let's go back up top into the customized reports. So we've just looked at the months. We have the sort options, the sorting options we saw up top. So we've already seen the sorting options. If we then go down to the the subcolumns, we have the previous time period. Now, this would be an item like, what if we wanted to see 1 month compared to another month? We can see it already here by using the months option. That's one way we can do this. For example, if I change the second date here to 02/29/20, so then we have the 2 month time period, and we're to say OK, then we have our comparison. We have the January and February. That's one way we can do the comparison. Another way we can do it, and we can go to the customized reports up top. We can go down here and say, I would like to see the previous period. Now, this is a little bit tricky to wrap your head around, because what does that mean? The previous period? Well, that means that, we must be talking about 1 month period and then take the previous period to it. So, for example, if I was to change the beginning date up top to 02/01/20, to 0229 or to the end of the month, then we're in 1 month's time period. Then if I was to take the previous period to it and say okay, then we have February and January. Notice what happens here is that it actually put the current month first, which is nice, right? It put the current month first and then put the prior month. So it might be a little confusing to read that at first, but that is kind of nice to have that because it'll put the most current data. We're reading the most current data from left to right as opposed to reading the oldest data first. Then if we go to the customized reports up top, we can also add the change in terms of dollar amount of change and say okay, and that'll give us our change here. So now we've got the difference between the two. Of course, if we took the 98,995.56 minus the 94,221.17, we get our change. Then we also have, if we go to the customized reports, the percentage change. Selecting the percentage change, we then get the percentage change. Now, what does this look like? Well, if we pulled out our trusty calculator here, what we're saying, for example, with cash, we have the 98,995.56 minus the 94,221.17. That's going to be our change, 4774.39. If we take that change and divide by the previous year, the oldest number, the 94,221.17, and we move the decimal over 2 places, that's going to be 5.1%. So that's the percentage change. In this case, the percentage increase. So it went up by 5.1%. These are going to be really useful if we want to make comparisons to other type of companies that have different dollar amounts to us, but the change should be relevant. So this is anytime you want to measure something against some other set of numbers, some other financial statement in this case, or any kind of measuring thing, these ratios are going to be really useful to do. Let's do it one more time. Let's do it with the this one, the inventory. It went down 32%. So we had a 1312 minus the 1944. That's a change or a decrease of the 632. If I take that and divide it by the original number, 1944, we get the, if I move the decimal point over 2 places, a decrease of 32.5%. If we go back into the customized report, we have similar options for the previous year. So we can do a similar type of setup for the previous year. I'm going to uncheck now the previous period. Then we have the 2 options over here, which is the percentage of row and percentage of column. Let's change our dates up top once again to 01/01/20 to 12/31/20 for the year, January through December. We're going to then select the percentage of row and OK. So the percentage of row, and note I didn't change the months, so I'm going to change the months now. So I'm going to select the month drop down, and I'm going to go to simply the total. So just the total. And then we have the percentage of row here, not very useful when we only have the 1 column. So if and we go back to the months up top, then we'll have some change in the percentage of rows. Let's take a look at the last one. We're going to go to the customized reports one more time. We're going to then uncheck the percentage of rows and take a look at the percentage of columns. And then I'm going to go back from month to the total columns. And then we're going to say OK. And then we've got the percentage of the columns. Now, when you think about the percentage of the columns, it's tying out to you could think of it the most relevant number within the column. In this case, we're talking about the total assets. So the total assets is down here. That's 100%. We're comparing everything else to those total assets. So for example, if we're thinking about cash, we've got the 98,995.56 divided by the total, which is the 228,089.56. Something went wrong there. Let's do that one more time. We've got the 98,995.56 divided by, not minus, the 228,089.56. We then get, if we move the decimal 2 places over, 43.4%. So cash then is 43.4% of the total assets. This kind of comparison is really useful if you're comparing to another company that has different amount of total assets. Maybe they have more or less money, but you want to compare their ratios. The ratio comparison then can give you value that you couldn't get if you just simply compared the dollar amounts. So then you can compare to someone that's like a publicly traded company possibly that has a lot more money in total, but the ratios can give you some value when you do those comparisons. Similar kind of thing down here on the liabilities and equity. The bottom line, of course, being liabilities and equity. You can then compare then the accounts receivable and so on and so forth to the total liabilities and equity. We're going to go back into the customized reports up top. We have some advanced settings. So if we go into the advanced settings, we've got display rows. We can display the items that are active, or we can display all of them, or we can display the non-zeros. So active means that basically even if it was 0, but there was something that happened in that particular account, it'll show the 0, which is kind of nice because then you can go into it and double click on it and zoom into that account and see the detail in it. If you look at all of them, then it's going to be showing, in the case of the balance sheet, all accounts even if there's no activity in them. So for example, if we said OK and OK, then you'll notice we have a lot of accounts that don't have any activity, a lot of 0 accounts. And even if I double click on them, they have no activity here. So there's no real use for them on this report, except to just know that they're going to be in, the chart of accounts, basically balance sheet type of accounts. So if we go back to the customized reports, advanced settings, you probably want yours on the active or the non-zero accounts. Display columns, we want the active, or you can have all columns or the non-zero columns in a column format, and the reporting calendar. So obviously the default here is going to be the active, and then the reporting calendar, the fiscal year, the calendar year, the income tax year. Now, typically for a lot of companies, they'll be the same thing. The fiscal year will be 12/31. The calendar year will be 12/31 year end. But if there's any changes, then you can choose those items which will adjust those. We can say OK. And then, of course, we have the revert. So if I was going to revert back to the prior settings, it'll revert back. I'll then change the dates because I don't want to revert the dates back. And I'm going to go say 01/01/20 to 12/31/20, and then OK. And then we're back to our standard settings.